You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody. That music means we are back once again for episode 2 of your bi-weekly options extravaganza known as the Option Block, what the cool kids call the old OB. My name is Mark Longo. I will be your host, your guide, your drum major, leading you down the parade ground of options trading. Of course, you know where to go to learn more, theoptionsinsider.com. And of course, keep binging on the network wherever you get this content. If you just listen to the Option Block, get on over, get the full network. Then you're getting Options Boot Camp, and you're getting Options Playbook Radio, getting TWIFO coming up a little bit later today. Got a great guest joining me, a professor now, but a former Wolverine trader turned professor. Going to talk about calendar flies and the ags and some other hogs, crazy stuff we haven't really talked about on the show. So look forward to that. That should be fun in a little bit later. Where do you get all that? Of course, you got to listen to the full network to get all that goodness. And of course, if you want to go above and beyond, you want to get additional shows, you want to get Pro Q&A. Just as Scott Nation's back in the Pro Q&A hot seat this week. These are always fun to have in there. We got Options Oddities, I believe, coming up tomorrow. We'll see how we work out all the crazy mad live schedule tomorrow. And of course, giveaways and a whole bunch more, plus live streams throughout the week. And as well as you guys are all you pro folks right now are already getting your hands on the exclusive content that we recorded for you down at the OIC conference. You don't have to wait. No waiting for you pro folks. It's all in your hot little hands, or a good chunk of it is already, and the rest should be heading out soon. So you guys want to check out all of that exclusive stuff, all the great stuff you had to go all the way down to San Antonio to get access to. You guys already got it. TheOptionsInsider.com/pro is the place to go to begin that journey to the dark side. Let's see who's joining us on the dark side today. First, let's go out to the quiet, the sleepy, the tranquil hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the old program, sir.
Always happy to be here on a beautiful sunny Thursday in St. Charles.
And also joining us, I do believe that a little bit of background noise means we are joined locally, not from the grounds of the shores of Maine, but here in Chicago by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. Rock Lobster, welcome back to the program. I did not expect you today, sir.
I'm making an emergency appearance. Why
don't you tell the people, what are you up to? What are you guys doing this week?
Yeah, we're out here for an event with our students, kind of a little joint venture with Money Map Press. So we're out here with them and kind of regaling them off trading and ideas and education and all that kind of stuff. So it's been a nice event. We saw a game. Of course, there's food and beer and all kinds of fun stuff. So I'll probably gain 10 pounds. But other than that, it's a great time.
Can I see Mark tweeting out you guys at the SIBO this morning?
Yeah, we were there yesterday, actually. We were all excited to see the new floor, but they wouldn't let us on.
I was going to say, is there anything left to see there?
No, I mean, I even wanted to see the old floor, but they wouldn't let us on even up into the room to see the old floor. And we were going to see the new one in the post office building. They wouldn't let us see that either. So no. We did. It is a nice building. Let's put it that. It's a lot of nice building. We treated it.
Yes, it's actually right down the street here from the studio. They're on Canal now as well. So yes. A few blocks away from the Options Insider HQ is the new home of the SIBO as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. It's another one of those kind of weird days, listeners, where the markets kind of want to figure out what they want to be today. Coming out hot off the heels of a crazy sell-off day, 4+% sell-offs in a lot of the major indices. That, of course, was hot off the heels of a rally day where everyone was saying, okay, it's BTFD season. Let's get back in there. Let's drive the S&P well north of 4,000. Now we're back south of 4,000, 3906 to be precise, as we kicked off the show. So nigh on 100 points below the 4,000 level. It's kind of starting to put our poll into stark relief there, where you folks want to start BTFDing. A good chunk of you, I think the winner was around the 3,700 level, around that support level. And heck of a lot closer now than it was even when we posted that. So intriguing stuff out there. Well, let's go on out, see what's going on from an overall vol perspective. Actually, before we even get this, let's break it all down, because it is a bit of a mixed day. NASDAQ has struggled valiantly to try to be positive pretty much all day. It's had fits and starts. Right now, it's up about 0.15%. The S&P off about 0.5%, and the Dow off nearly a full percent, about 0.9%. A lot of that weakness over the last few sessions has been led down by retailers, Walmart and Target and Kohl's just blowing the doors off to the downside. Inflation, shipping costs, logistics, all of that really weighing on them pretty aggressively. So most of them missing their numbers pretty badly, and that dragged down a lot of other names with it. The great sucking sound. There's a lot of retailers this week, so where there goes Walmart and Target, so go the rest of them usually. That means VIX is up when we kicked off the show. It's almost 31, about 30.75. That puts it up a little over 2.5 points since our show on Monday. VVIX at about a 108, actually down 2 from Monday's show. VXX 26.25. That puts it up nearly 2 points, about 1.75 points from Monday's show. UVXY at about a 17. Puts it up 1.6 points from where it was on Monday's show. SVIX, so the inverse VIX, back down nearly a full point, about 0.9 from Monday's show. It's at about a 10 when we kicked off. UVIX 21.5, up 1.5 points. And VolQ, if you want more about VolQ, remember, we just had the creator, Scott Nations, on our Pro Q&A on Tuesday. So check that out if you want to learn more about what the heck's going on with VolQ, how it performs, some interesting surprises and nuggets and pearls of wisdom on that one. VolQ 34, a little bit north of 34.5, about 34.6 when we kicked off the show. Actually puts it down exactly 6 points from where it was on Monday's show. All right, a lot of table setting. He's joining us from, I don't know where he is now. He was down the street yesterday. Let's see where he is now. He is the rockingest of Lobster. Mr. Lobster, A, where are you today? And B, what is lighting up your tape?
I am at the Drake Hotel.
Very fancy.
Love the Drake.
Yeah, it's a good place.
I do believe I may see you there tomorrow, sir, for an early vol views.
I hope so. I mean, I think you're going to set up here, right?
I think that is the plan.
Do the whole, you're going to do the whole enchilada. So as far as like what's going on today, did you find the reversal kind of interesting and the lack of volatility follow through kind of interesting? I'm curious to Mr. TOSAW's take on this, but I think what's happening is, the market's just getting used to this. Things are just going to stink for a while. And that's going to take kind of the bigger upside moves out of play. And I think that's why, like VIX today, like the market looked kind of ugly this morning. It's weird because I put some orders in, kind of like goofy orders to fill some puts that I owned in the SPY. And I was kind of like, they filled on the open, but if I didn't have the order in, they never would have filled at all. So that's good discipline for me. Go me. But, markets are down, VIX is down. So it's just, I believe we're just kind of a tired market where things, normally you have higher vol when you have a lot of upside and a lot of downside. You remember, Mark, in the old days, right? You sell a bunch of calls and you hedge your stock and then things would blow out on the upside and then your short gamma would run you over.
Yep.
I think there's a little bit of that today where there's not as much worry. We can have those 1%, 2% gaps, but I don't think we're getting the 5%. You know what I mean? So, like, without those, like, crazy multiple day moves to kind of, the Fed really can't do much. They have to be serious about inflation. They let it get away from them. And, and the market's just going to stink for a while and these multiples are going to get compressed. And I think that's what we have. And I don't think that's going to go away anytime soon. So we're kind of faced with that. But as far as stocks goes, they finally came after the big boys, right? So you remember the dot-com crash? Like basically stocks were down 80 or 90% from the peak. And if you look at like ARC funds, that's like the poster child for sort of all those overvalued stocks. It's down, 80 or 90% from the top, something like that. It could probably get to the low 30s, something like that, and I think it hit that. But for the most part, it's had its crash. The only stocks that haven't crashed, and I know Mark has probably touched on this, the greasy meatball has. We haven't revalued Apple, NVDA, Microsoft, right? Where all those things got 20 to 30 to 50x earnings multiples. And those have to come back, especially if we get kind of a little bit recessionary environment. Those multiples are going to come back and get chopped down to like high teens, low 20s again. So I think that's kind of the process we're going through, where, that's what we're going to see. And that's kind of where the ball is and where the market is. And we're just going to keep getting all this chop where, VIX could stay at 30 and we can be up or down 1 or 2% every day for the foreseeable future, until we get a little bit more clarity on when the Fed is going to end their interest rate process, right? And, I think a lower number is in the cards. I just don't think we're going to have that big blowout for the number. So, I still think 37.50, something like that, is a reasonable number, and essentially erase all of the money and the market that got pumped into things after 2020. If you think about it, look at where we are. Look at January, February 2020. Figure out how much money was pumped into the market or pumped into the economy from, since the beginning of COVID till now, and just all that's coming out. It's like, it's, I guess the market's been running on a sugar high, and now somebody's taking away they're taking away all the candy. And I think that's where we find ourselves.
No more candy for you, says the Rock Lobster there. Let's go on out to the land of St. Charles, where they always love their candy. It's like Candyland out there in the land of St. Charles. Mr. Uncle Mike, what do you say to a guy like the Rock Lobster? He wants to take away your candy, sir.
I would say, I want candy. That's what I would say. So anyway, so just to add to what Andrew was saying in terms of the reversal this morning. So at about maybe 20 minutes into the market today, looked like we were going to be down a lot more. We were down, I believe, around 50 points in the S&P, if I recall correctly. And then, not to sound too Forrest Gumpy, but just like that, it turned around. And so what's interesting about it, it didn't quite reach, we got down to 38.76 in the S&P. It didn't quite reach the lows that it made roughly a week ago when it got down to 38.58. That was the first interesting thing that I saw. And we still have not quite gotten into bear market territory to the 20% below the 48.18, the high that was made in early January. And so we still are not in a bear market as of yet, but we are just dangling around it very closely. And so I think it's very interesting to see the fact that when we get to those levels, we are seeing buyers come in. Now, I think today is a very important close, because if we do go below the into bear market territory, which is 38, like 50 or somewhere along those lines, I'd have to look to see exactly where it is. We're still slightly above it. But if we do go into it, then that might give us the run that we would need to get down to the levels Andrew was talking about the 3750, 3700 levels, of where a lot of people are saying the next level of support is, or the next buying opportunity. Now, what they're seeing with those levels is the close of 2020 and the S&P 500 was 3756. And so that's kind of a key number in that all of the 2021 gains with which we've had would be erased at that point in time. And we'd be back to not only the levels with which we were early in 2021, but this would just wipe out 2021 totally. Now, the other spot to be, the other interesting thought, or the other level, which is actually kind of concerning to me, would be the close of 2019. The close of 2019 would be 3230, and that's a long way down still from where we are. Now, with COVID, once COVID was announced and we hit the COVID bottom, so to speak, markets were off roughly 32% on the year from the beginning of 2020 to the COVID lows on March 23rd. They're down roughly 32% or so on the year. And so for right now, if we do go down another 300 or 400 points, we could be at levels below the open of 2022, similar to where we were in terms of amount lost on the year as to where we were in 2020. I think that we would have a bottom. I mean, the next level of support, or the next level with which I would become a little bit more of a bull. I mean, let's face it, I'm always a bull, even when the markets are going straight down. But the next level with which I could see buyers coming in would be right around the 37.50 mark, not only for the reasons that it was the 2020 close, but also we did show some support there for a little bit in late January of 2021. We made another we did make another run at that number in March of 2021, and then the market kind of took off from there last year. But I do think that there is technical support at that level. Now, in terms of where we're going with some other things that are lighting up my tape, if you will, we do still have oil. Oil is still going higher. It just does not want to go down. We have oil at 108 on the day today, up about 1.5%. Gold is up. Silver is up. So a lot of commodities are continuing to go higher, telling me that this, at least for today, prices are still going up. The other thing with which that I think is worth noting right now, to add to what Andrew said, would be on the VIX, in that it does appear to be at a spot to where 30 is not really that much of an issue anymore. People aren't afraid of 30 anymore. But with that, it could easily go to 40 or 50 in a heartbeat. So just make sure that you maintain risk management. Final thing that I want to say, I was talking with a client the other day, and he was saying, is 4,000 a magnet number in the SPX? Well, I remember, I mean, this just shows how long we've been doing this show. I remember it was back with the Viceroy. It seemed like I said it forever, almost every day on Around the Block. 2,000 is the magnet right now for the SPX, meaning that it can go above 2,000, below 2,000, but seems to always find its way back to 2,000. And so it looked as if 4,000 was starting to become a magnet for the SPX, but at least as of right now, the magnet's been broken to the downside, and it's going to have to get some strength in it to get back to that magnet, so to speak. And it has been forming a little bit over the last couple of weeks, but at least for now, the magnet's been broken to the downside. And like I said, today's going to be a pretty important close, I think.
That it will. Let's see what's lighting it up out here on the options front today. And surprise, surprise, these kind of weird whipsaw-y days, they tend to draw a little bit of paper, and that's pretty much what we're seeing out there today. VIX putting up some numbers, 429,000 contracts already on the tape as of a few minutes ago, listeners. And that ADV has also ticked up quite a bit as well. It was back below 500K not too long ago. Right now, 592, so threatening 600K in the other direction. How's it been breaking down in terms of numbers all week? We'll get to that tomorrow. On Vol Views, SPY already, listeners, already at 4 million contracts exactly. That ADV has ticked up. Remember I said on Monday, SPY was at 7 million ADV exactly, and the S was at 2 million exactly. Both of those have ticked up since our Monday show. The ADV now 7.15 million in SPY. The S closing in on 1.5 million contracts already, 1.42 million contracts as of a few minutes ago. That's a lot of paper in the S. That's more than the ADV was not too long ago out there. The ADV in the S now 2.06 million contracts. That's a pretty high number for the S. Can they sustain it? Well, if we keep rocking and rolling out here the way we are right now, then the answer is yes. Ask me again, I should say, in August if we can still maintain a 2 million ADV in the S. We shall see. The small caps, they're kind of the laggard of the bunch. 332,000 contracts on the tape right now. Their ADV is 874,000 in IWM, so not as much on the tape right now in small cap land. And you know what? Let's mix it up. We don't talk about them as often. Let's throw on the Qs, maybe in honor of having Scott on this week and talking about VolQ and NASDAQ. What's going on with the Qs? The Qs are at about 1.7 million contracts right now, and the ADV is 3.01. So you have a lot of even numbers in the major indices. Pretty much 7 million for SPY, pretty much 2 million for the S, and almost exactly 3 million for the Qs. Kind of weird round number territory that we find ourselves in right now. Let's get on out to the single names. And, in the past I've said, when things get wild on the index front, we don't see as much paper in the single names. And that is kind of the case today because it only cost you 201,000 contracts to break into the top 10. But the upper echelon of the top 10 today is putting up some paper. Number 10, Facebook, 201,000 contracts on the tape. Let's see what the old FB is up to right now, off not even a fraction of a percent, about 10 cents on the day. Trading right around 192 right now. So still below that 200 level. A lot of people like to fixate on out there. But Facebook doing 201,000 contracts. Number 9 is a name that's kind of been a bit of a frequent offender, on and again, off again for the last couple of months. This is SoFi, back on again today, 202,000. So we're kind of clustered together there at the bottom. SoFi is up half a buck or 7.7% today. It's a nice little run for them. They're trading almost $7.80. So they're bucking the trend to the upside out there. Number 8, it's Walmart. I mentioned before the kind of retail horror show that has been this week's earnings. Walmart kicked that off earlier this week. They're still down again today, down almost another 3% or about $3.50, trading right around 119 right now. Let's see, how low do they get? This is pretty much, actually, this is their 52-week low they're at right now. They bounced off 118.60 earlier, and that's pretty much their 52-week low. So, yeah, rough days here for Walmart. Good for 225,000 contracts. Number 7, are they a movie theater chain? Are they a gold miner? A little bit of both. Two great tastes that taste great together, apparently. It's AMC, 233,000 contracts. They're up a whopping nickel today, right around $12.80. They've had a little bit of a range. They got up today to $13.50 before selling off to pretty much where they are right now, $12.70 and change. So a little bit of a range out there today, but it's good enough for 233,000 contracts. Number 6, haven't seen them on the top 10 in a little bit. This is Lucid Motors, 247,000 contracts for them. They have a nice little pop right now, up 2.25 or $19.50 right now is where they're trading, up nearly 13%, about 12.75% right now. So some good news coming out of Lucid. Looks like they're getting an infusion of cash from the Saudis. So Ford's recalling a bunch of cars, and Lucid's popping on some cash infusions. Number 5, Uncle Mike, cover your ears, sir. Your nemesis in life. It is Cisco. And number 5, 276,000 contracts, off $7 or 14.6%, trading right around 41.30 right now. So they're also at a 52-week low, just getting the stuffing beat out of them, shall we say. Not good. They surprise revenue decline. So never a good thing on the earnings front there. Number 5, Cisco. Number 4, it's NVDA, back to chip land. Good old NVIDIA, day that ends in Y. They're probably hanging out around number 4. And that's exactly where they are today, with exactly 400,000 contracts on the tape. What is NVIDIA up to today? Let's find out. Listen, the video is actually up $3 or about 1.75%, trading right around 172.30. Number 3, it's the other one you can kind of usually reliably expect in this 3 to 5 category. Right now is number 3. It's AMD, 556,000 contract. Who's out there slinging AMD? And it's funny. All these other names we talk about here, a lot of the meme names, obviously, in the hot ones, Facebooks and whatever, Ford, even Lucid, Apple, certainly, Tesla, certainly. People hit us up about those all the time. Are you out there slinging AMD? I don't think I've heard from anyone in our audience who's slinging AMD, yet they are constantly in the top 5 every day. So people are clearly trading them. I just don't talk to any of them. It's interesting. So yeah, hit us up if you're slinging AMD. Let us know what you're up to out there. It's an intriguing little sub pocket there of the marketplace out there. Good for number 3, 556,000 contracts. It's up $1.62, right around 1.7%, because it's trading right around $98 for AMD. Let's see, they got down to 72.76. So AMD has bounced nicely, unlike a lot of other names. They got down there, looks like, back on April 27th. Is that the low? They got, I don't know, doesn't looks like they closed at around 84. So they got that low. Maybe I must have gotten that low earlier. Let's see. When did they get? Oh, no, that was actually where they were trading a year ago. So net on the year, it's still a plus year, but nowhere near as good as it was. Obviously, it was trading nearly 165 back in November. Number 2, it's a day that ends in Y. So there's a T Musk name. Has to be. You're legally obligated to have that in the top 10. Today it is Tesla, no Twitter. That's interesting. Tesla holding out its number 2 spot, almost 1 million contracts, 940,000 contracts. Like I said, the top echelon here, top half of the top 5, doing some numbers here. Tesla right around the 709 level, off a half a buck right now. They dipped as low as 696 today, so they've had a bit of a range. Rallied as high as 730, so they had almost a $35 range on the day. So Tesla moving around a bit, good for almost 1 million contracts. And number 1, it's the fruit company, the good old Apple. 1.6 million contracts. That's a lot of paper for Apple right now. Again, they're off about 2.6% or nearly $4, about $3.75. Looking back on it here so far on the year, Mr. Rocklobster said they still have more to come for Apple, and they probably do, but they have clipped it this year so far, almost 25%. It's down nearly 45 handles from where it kicked off the year. It was 182, and now it's 137. So they have clipped a lot off the top here on Apple. Do they have some more to go? I mean, their PE is still 22. I will leave that to you if that is too high in an inflationary market out there. But intriguing stuff. Good for 1.6 million contracts out there. Let's get on out to the earnings front here because they were driving a lot of paper this week. Tuesday, like I mentioned, Walmart and Home Depot. They kind of got lost in the wreckage that was Walmart. Wednesday, Target, Lowe's, Bath & Body Works, and CSCO. Spoiler alert, most of those were not good. Today, we had Kohl's before the bell. They screwed the pooch as well. They're not good. BJ's and Palo Alto, John Deere, and then Friday, John Deere and Foot Locker. Here's their move results reports, hot off the presses from our friends over there at Oratz. We had CSCO yesterday after the bell. They were at 48.36. They were pricing in 5.6%. They delivered more than double that, nearly a 3X, almost 14%, 13.5% for CSCO. So they blew the doors off in the wrong direction. They were shy of 42 when they ran this report right before showtime. BJ's, so going back out to the wholesale club market here, they were today before the bell, $53.5 is where they were trading. They were pricing in 11.9%. It looks like they actually rallied to 59 and change because they were actually up 10.6%. So they underperformed. Looks like they actually bucked the trend and actually turning green today. Let's see where they are right now. Yeah, they're still up 9%. So looks like BJ's can make it happen when Walmart cannot. That's interesting. Wow, who expected that? All right, I guess apparently not the market because they're moving them higher out there today. Let's look really quickly, see if we can see any other interesting ones out here from this morning. No, so let's go out to the ones that are popping off tomorrow, I should say after the bell or before the bell. Tomorrow before the bell. We got John Deere before the bell. 368.70 is where they were trading as of a few minutes ago. They're pricing in 21.25. In the past, they moved $16. So they're pricing in some extra vol out there in tractor land. Hey, input prices, all sorts of prices are going up for them. So probably not surprising there. And then we've got Foot Locker. Is there more vol in the athletic footwear? Let's find out. They're before the bell tomorrow as well. They're trading almost $31, $30.92. They're pricing in $4.57. In the past, they've moved $2.73. So spoiler alert, the answer is a resounding yes. Wow, that's a lot of extra juice in Foot Locker. Not a name that we talk about a lot here on the network, but one that clearly is pricing in some juice. Let's go out to Applied Materials as well. They are today after the bell. A 111.34 is where they were trading as of this report. They're pricing in $7.32. In the past, they've moved $4.19. So almost a 2Xer out there. So AMAT looking pretty juicy out there as well. Let's see, what else do we have here? Let's go to Best Buy. Best Buy as well. They are next week before the bell, the 24th. And they were pricing almost, they should say they were at right around $75.62 as of this report. They're pricing in $8.75, listeners. In the past, they've moved $5.25, so $3.50 worth of extra juice in Best Buy. I guess after what we saw earlier this week with a lot of other big box retailers getting smoked, maybe that isn't the most surprising thing. Let's get on out now to see how the season is shaping up and looking fairly decent, all things considered, even though we're talking from a vol perspective, not from a health of the names report. That's a different thing, listeners. All we're looking at is how much they're moving. We don't care upside or downside. So this week is at about 107%. Last week was 86%. The week before, 110%. That's the best week of the cycle so far. Week before that, looking kind of rough, 76%. And then the week before that, week one, an apocalyptic 65%. So all that averages out to about 90%, listeners. So yeah, the the big weeks were clearly week 2 and week 3. That's where we had many, many hundreds of names. So far this week, we only have 27. So a much lighter week here this way. That's why it averages out the way that it does. Let's look at the earnings trades report, also lighting it up. You haven't checked this in a while, listeners. Get on out there. We got some short straddles coming up in VFC and a long calendar in ROST, ROST out there, as well as a short straddle that they got out of today in BJ's, and they got out of a calendar in KSS out there today as well. So a lot of wheeling and dealing here. Right now we are tracking, 87 long straddles, 36 short straddles, and 88 long calendars. A whopping no short calendars right now. That's too crazy for the ORATS folks right now. So you want to check out all these trades, how they're performing. I'm looking here at some of these straddles. Intriguing stuff here for these. Check them out for yourselves. Again, it's all free. It costs you nothing. TheOptionsInsider.com. Click on the earnings, or I should say options, news, and articles tab to begin your journey to the dark side as we begin our journey to the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get wild. Let's get whimsical, shall we? Let us unleash the Eye of Sauron. See what it has up its sleeves for us today. First, let's go back. All the way back to Monday's show. I'm not sure if the Rock Lobster's brain works that far back, but we shall see. We shall see if you can remember all the way back to Monday's show, listeners. At the time, as you'll recall, we profiled someone coming in and playing pretty close to the fire, going weekly, going in the money on Credit Suisse. This is ticker symbol CS. You know them out there, the big banking and financial services conglomerate. They produce a few products that perhaps you may have heard of. At least they used to. They're lighter in the vol space than they once were out there. Trading right now, $6.74. The high for the year is $11.19, and the low was $6.07, which I have a feeling wasn't too long ago. When did that low come? That low came on Wednesday, May 11th. So we're not that far removed from their low for the year, listeners. And someone may be thinking that was pretty much the case, because on Monday's show, someone came in and bought. Usually we see the out-of-the-money calls and that sort of thing. This guy came in and scooped some in-the-money calls. The stock was $6.54. He paid 55 cents for the May 6 calls. So he paid a penny over for these in-the-money calls, listeners, 5,000 times. If you're wondering, that's still a 49 vol. So these were still kind of frothy out there right now. This was obviously not an earnings play. The next earnings are in July, and these are going out this week. And as I mentioned, Mr. Rock Lobster, the stock right now, $6.74. It has dropped a little bit. It was $6.76, but still, if you do the basic math, listeners, these are looking good. He's up probably about 20 cents or pretty close to, at least he was right before the stock ticked down again. So, and we checked right before showtime, Mr. Rock Lobster, these are still open. So if this guy's not careful, he's going to end up with some stock. Maybe that's his plan. Maybe he wants the stock. We don't see a lot of in-the-money weekly call buys, Mr. Rock Lobster. This one's kind of weird, but so far, at least, it appears to be working out, and our friend is sitting on some gains, but hasn't taken them off. What say you, Mr. Rock Lobster?
I have to say, don't you think buying the 6-level calls were bold in Credit Suisse?
Very bold.
For this week.
That's why it was in the odd block. It was weird and bold and all sorts of other adjectives.
It was every adjective. I think they're up some money, but in this market, you would expect to see some closing. I was actually trying to see if I saw any closing volume today on this contract, and I didn't see any. So, maybe they're thinking that's it for the banks. But I always keep Credit Suisse is one to me that always they have some kind of something's under their fingernails. It always seems like, oh, our risk management failed. Oh, we lost $5 billion. Oh, we don't know where our money is.
We secretly had $8 billion worth of exposure to Putin we didn't know about, right? All that kind of stuff.
Yeah. So the fact that somebody bought calls and made money, number one, I want to know who this customer is because they're clearly smart. Because it's making money being long in Credit Suisse is definitely not one of the easiest trades on the planet, I have to say. So I would expect that they would close these, but maybe they just want the stock at the bottom. But again, that's not a stock that I have any interest in ever in owning. It feels like at any price, but still, they're up 20. They're up what, 20 cents or something. But I think the May 6 volume today is a whopping 84 contracts, so they are not closing. I did notice some closing on some 8 puts. Look like closing volume, and I can't quite tell, but it's possible they are selling to close those puts. So maybe the guy that's long the puts is getting out, and the guy that's long the calls is going to sit in for a little longer.
Yeah, no closing. It looks like they're up about $1.25, so not quite your girlfriend's Ferrari, but you can get her a nice Model S with that, Mr. Rock Lobster. So I don't, or your boyfriend, nice. Whatever you like out there. You can get someone a nice. No one's going to turn their nose up at that unless they hate Musk. You kind of answered my question already, because I was leaning on, if I had these, I already would be out, I think. I probably wouldn't have put it on, but if I put it on, I definitely would probably be out. Friday comes around, expiration bell rings, Mr. Rock Lobster, or right before it. We're hanging out right pretty much where we are right now. Do you take the stock? You get the heck out of Dodge?
You know what? I would get the heck out of Dodge, but right now it's like, they can only sell them for 4 cents under parity. So it probably is not the most appetizing exit for the call holder currently. But I would try to get out of them. But I don't know what this customer's long-term plans are for the stock, but it's not something I would want to sit in for a whole lot longer with this market.
The magic of options.
They could go to zero in a second.
Yes. The magic of options. Buy them for a penny over, sell them for 4 cents under. That's just good stuff.
Oh, the good old days.
Yes. So yeah, just a trader in me, I think I'd be getting the heck out of Dodge. But maybe this person really wants himself some Credit Suisse stock at the 6 track, in which case he's well on the way to getting his wish. Listener, let's go on out to someone who maybe the movement they're seeing out there right now isn't their wish, but perhaps they're wagering that better days are ahead. We were just talking about the retail wreckage, listeners out there. Walmart kind of led the dance, but following right behind them, their partner in the two-step out there was Target, taking a drubbing. Looking at this chart, it just falls off a cliff right here, listeners. A year ago, it was 219. It got all the way up to, looks like almost 270, 268 to hit it in August and flirted with it again in November. Then it sold off in February, actually the day before the invasion, to 189.90. So it got pretty beaten up leading into the Putin announcement. And then, weirdly enough, it's rallied pretty hard ever since the invasion. So from February 23rd, it rallied all the way up to nearly 250 again, 249 on April 20th. That I haven't looked at the numbers. I don't follow Target too readily, so I'm sure there was some interesting reasons for that outside of more buyers and sellers. That seems kind of odd in this environment to rally that aggressively. And perhaps the market is catching up now, because it went from 219 and a quarter yesterday, or I should say 215 and a quarter yesterday, to where it is right now, 152.75. My goodness, they have come for this thing today. So they pushed it back below where it was in February, and then took it another 37 handles for good measure. So, wow. They're just coming for Target and all things retail out there today. Let's see what our Eye of Sauron found. Now, you might think, listeners, maybe somebody scooping some puts to try to get in on this sell-off train. Maybe somebody coming in and saying, you know what? I'm going to actually scoop some calls, maybe, because I'm betting on a reversion. We have seen that once or twice in the past. Nope, we didn't see either of that. Instead, we saw someone coming in and saying, you know what? I think this thing's pretty beaten up. Could go a little bit farther. And if it does get down to, let's say, 130, then I'm in. And they sold the 130 puts 10,000 times for $1.41 this morning. That is a 54 vol pretty much. The stock was a little bit higher, 154.45. So these are a little bit in their face right now. So they are failing the first Rock Lobster metric of, is it bid in your face, yes or no? And the answer to this one is, unfortunately for them, yes, because they sold the puts. There are no earnings in this cycle. The next earnings is in August. So obviously they just had earnings. So got a little bit of room. This is not an earnings play. This is just, it looks like a straight up value play. Let's look really quickly, see if we can see the last time they were at 130. They were at 130. 130 was August of 2020, listeners. So if you are so inclined to pick up Target at that level, you're getting it pretty much at the August of 2020. How low did it get in the nadir of 2020? It got down to 92.57 in April of 2020. So it had rallied a little bit by that point. But intriguing stuff. Mr. Rock Lobster, what say you? Someone drawing a pretty sizable line in the sand in Target on the 130 strike, saying, I shall take that 10,000 times, sir.
Yeah, I looked at those, but they didn't look too bad. I wanted to see what level that got them back to. Yeah, and you know what they're doing? They're erasing all the pandemic retail fluff. So I actually think that's a pretty decent level for these particular puts. I don't think it's that bad. It's 1% return, so it's not the greatest, but you're getting Target at $100 off sale basically. So I think that's a good. It's certainly a good place for that position. I have to be honest with you. It's not. It does not look on. It's probably Target should be. That's what it should be trading at. The fact that it was 200 and whatever bucks was crazy. But I mean, they sell stuff. Okay, it's not. They're not inventing new widgets here, right? They're just selling clothes and whatever, and high priced kitchenware. So I think it's a much better. I think it's a good line in the sand put. It's a solid. And maybe the fund takes delivery, but it's certainly the right price.
Yeah, I don't hate these either. I don't hate that level. I don't hate anything about these really. So we've seen some crazier puts. I certainly don't put these in the same category as the weekly in the money Credit Suisse calls. I like these a lot better. So we'll keep an eye on these. What do you think, listeners? You like these? You hate these? What do you think about Target at these levels? Hit us up. Let us know. Let's go on out now. We got a rare twofer, Mr. Rock Lobster. We're going to pay off a trade and also talk about a trade that went up this morning that seems eerily similar. First, we're going to pay off a trade we talked about on the May 9th show. So 10 days ago, we talked about the Canada Goose. I think this was actually a listener request from our live chat. Canada Goose, those some might say overpriced winter wear out there for that little badge on the jacket. Let's see. This thing, ticker symbol Goose, GOOS, trading right now $21. A year ago, it was trading $37.80. Got all the way up to $53.64 on November 16th and has been trending lower ever since. Got as low on the year as $17.91. That was about a week ago on May 11th. So they've had an interesting run. We talked at the time, listeners, on May 9th. Someone was writing a line in the sand on the 16 strike. Let's see. Yeah, on the May 9th, they came in and blasted away at 14,447 of the May 16 puts. They sold them for 30 cents. Then someone came in and sold 3,700 more for 25 cents, another 1,500 for 30 cents. So they kept blasting away at these 16 puts, listeners. And you know what? They sweated a little bit. Not that long after our show. We did it on the 9th. And a couple days after our show, they got to their low of 17.91. So they weren't hitting the 16 handle, but these puts were probably bid up a little bit in their face as a result of that sell-off. By the way, that was a 110 vol that they sold. And then the stock pretty much turned around. They had earnings on the 12th. This was a total earnings trade. And it seemed like the market liked their earnings because they popped ever since then. They're trading right around $21 right now. So they have rallied almost $3 from that pretty much 18 handle they were at on the 11th. So Mr. Rock Lobster, these puts are still open. And it looks like paper pocketed, $430,000 on that initial block. But not to be outdone. The reason why I say this is a twofer, because we also noticed this morning someone coming back in and perhaps doing the opposite trade. We've got someone coming in, looks like this morning, 10,000 of the July 17 puts for $1.05. This is immediately post earnings. These were done when the stock was about $1 lower. It was $19.98. They might be wearing it on these right now because these are obviously, the stock's $1 higher right now. So, At first I thought it might be the same person because their puts are going out this week and maybe they want to reestablish on the 17 strike. They were $1 at $1.05. They could have been working this 105 offer and someone came to lift. That would be a lot. 10,000 would be a lot to lift. But they got 10,000 done, Mr. Rock Lobster, at $1.05. So first off, what are your thoughts on someone drawing a line in the sand in Canada Goose and seemingly working out, pocketing close to $500,000? And then today, looks like someone perhaps going the other way, scooping the 17 puts in July, sir, 10,000 times.
I see the line in the sand put. So that definitely was that was a good trade. It looks like they're going to get the full bet as well. And I am trying to get a good sense of those 17 puts. I'm not totally sure that those were a purchase, unless the Flowmaster give me some kind of magic on that one. I'm not totally sure about that as far as because I'm just looking at how the volume is going here, trying to do a little quickie analysis on it. But I mean, they're clearly the puts are 80, 90. I'm looking at the volume on the other side here, and it is possible that they got those off at 105. Accommodated trade. I'm not quite sure. Again, I'm not quite sure, but that could be a trade that somebody would like a delta point or something like that, maybe against stock in this market. But like everything since that trade looks like they just kind of been hitting the bid on these puts the whole way. So that's why I would say that, you know, the dollar figure is what, 8% return till July. It smells more like it should be a sale than a buy from the customer.
Yeah, that's what my spidey sense was telling me as well. We have these puts worked out already. They're expiring this week. It wouldn't be strange to see someone coming out and doing pretty much the same trade as out to July. So that was my first blush as well, that this is probably a sale. We'll have to dig into this a little bit more. Again, sometimes these executions, listeners, are a little bit funky. You got to read between the lines a little bit. Getting all 10,000 off for 105, that's a good execution. As Rock Lobster mentioned, maybe they got accommodated there a little bit, which is why I maybe thought they had to buy these. But yeah, strangely tight market. They got them off on the offer. I'm going to go out on a limb and say they probably, given it past his prologue, they probably sold these. But we shall see. In fact, we shall see what you guys have on the brain as well. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Welcome to the mail block. Our chat's all talking about Canada Goose and NFTs. Oh, looks like Mr. Unlimited. He's the one who requested those puts. Looks like he sold some of them himself. So congrats to you, Mr. Unlimited. You got some more dollars in the back pocket to put into Shiba. Making some news out there today. Let's see what's going on out there for our questions. We've been picking your brain on a lot of stuff. In fact, and we're getting so known for the polls, people are coming to us asking for polls. Like Mr. Overby, he wanted to do a poll in conjunction with his Options Playbook radio show. He wanted to know what you guys thought about that at the money straddle in the S. 30 days out, it's right around $250, $240. He thought that was kind of cheap. He wanted to know what you guys thought. Do you think that's too cheap or too expensive? And you guys agreed. Right now, 62.1% of you said you want to buy that straddle for $240. It's too cheap. 37.9% of you said sell it. It's too expensive. That one just expired. That was kind of a bit of a flash poll, listener. So you only had a few minutes to go participate in that one. Our actual question of the week right now is, people are looking for safe havens in these wild markets. A good chunk of you told us you're in cash right now. Which non-equity asset class looks the most attractive to you right now? And of course, if you don't see your choice, reply. Some people wrote in for vol. Not surprising given our audience here, but we didn't put vol in this one. We gave you more traditional selection. Fixed income, metals, energy, or crypto. Mr. Uncle Mike, if you have any thoughts on Mr. Overby's poll, looks like 2/3 of our audience wants to buy that 30-day SPX straddle for around $240. Do you agree or disagree? And then B, what do you think about our question of the week right now? What is your vote, and where do you think our audience is going for attractive safe havens, sir?
Well, in terms of Mr. Overby's poll, our question, 240 does initially seem like it's a little bit low. I would agree on that. But if we are that might be, if I had a gun to my head, I would definitely rather be a buyer. But what's interesting to me is that the market's only pricing that amount of movement in. And sometimes the market can be kind of smart, the options pricing market. Maybe we are just going to hang out here at the 3,900, 4,000 level for a while. So that would be, it'll be interesting to see. Now, in terms of the poll itself, what non-equity class would you want to be in? I actually would like fixed income. And the reason is that if right now, with so much talk of the Fed raising rates, this, that, and the other, if they don't raise 1/4 point of what people are expecting, I think that could be a rally in fixed income. Whereas I see the downside of fixed income would be I don't see a lot of it right now because I believe a lot of the news is factored in of what the rate hikes are going to be. So fixed income would be my choice, and I'm thinking the audience might be thinking the same thing.
Mr. Rock Lobster, same question for you, sir. What do you think about Mr. Overby's poll, 240 for a 30-day straddle on the S? You've made some comments in the past how you think that straddle might be a little bit low. So I'm guessing you agree with the 2/3 of our audience who want to buy that straddle. And then right now, our active ongoing question of the week is, which of these safe havens is most attractive, fixed income, metals, energy, or crypto, sir? What is your vote, and what do you think our audience is voting for?
I know I got a TOSAW kind of messed me up there a little bit. So I think
he's always messing us up here on the show.
I know. I think 240 is probably too cheap, but you have to trade the swings, because I do agree with. I think part of the reason VIX is only 30 is because a lot of the movement is orbiting. So we're down, 100 handles, we're up 100. 200 handles, we're down 100 handles. So there's a lot of orbiting vol. So I think that's definitely part of the issue. Number one. So that's why I think that straddle's only 240. But I think you got to take your money when it's presented to you. And the second part is I think metals. I'm leaning more toward metals because it seems like it's ignored this whole inflationary environment, and it's maybe because it was a crowded trade to begin with, because everybody thought we were going to have this runaway inflation and then we got out. I don't know exactly, but I'm going on the metal side instead of the fixed income side. But I see TOSAW's point about if the rate raises aren't quite enough, then the bond prices shoot back up. But I'm going with the metals as a store of value. But I do think the folks are going to say energy of all things, just because of all the continuing supply problems.
Energy is very sexy right now. Are they going to go for that? Are they going to go for the beat up, much maligned worlds of metals or fixed income? Let's find out. Right now, 47.1% of you are saying energy. You're all about the Texas tea and the nat gas and all that good stuff. Then we actually have a tie for number 2, which is rare. An exact tie, 20.6% each for fixed income and metals. So people can't make up their mind of those two. Both sectors have kind of been beaten up of late. Maybe you can't really say metals are beaten up. More so, they're just underperforming. It's a little bit different than the fixed income, but neither one looking super great right now. And then our audience kind of split on those. And then crypto coming up at the rear, 11.8%. You got about a day left if you haven't voted, listeners, at options. Speaking of crypto, really quickly, man, we were fast and furious. You guys were suggesting all kinds of great polls. People were throwing at us. Our listeners on the Crypto Rundown earlier this week suggested this poll. This was a flash poll, only went pretty much during the length of our show, but an intriguing one, especially for Uncle Mike because he loves this stuff. We asked you, which level you think Bitcoin's going to hit first, 10,000 or 60,000? And looks like you folks are in the bearish Uncle Mike camp. 46.5% saying 10,000, 30% saying 60K, and about 23% saying, yeah, you're not in crypto right now. So intriguing stuff. Along those lines, Mr. Uncle Mike, one of our members here, Nichols, he wants to know, on the heels of that crypto poll, he wants to know, at what price is Bitcoin cheap enough that Uncle Mike would take a flyer on it? Mr. Uncle Mike, what is that level? What is that price? Inquiring minds want to know.
I mean, I'd take a flyer if it was any level, if I was into trading it. I mean, there's money to be made there on the bullish and the bearish side of it. But in terms of as a long-term investment, I'm going to stick to I'm really thinking about buying the website. I'm thinking about it still, but I haven't done it yet. BitcoinReallySucks.com.
You buy that website, whatever it costs you, a few $100. You set aside a few $100, so the same investment level. If Bitcoin hits like $1, let's say, then you buy in, then you're hedged either way, right?
Oh, I like that. You can outperform. Oh, that's an interesting hedge.
So Uncle Mike, you heard it here first. He's in at the $1 strike for Bitcoin. I think some of our listeners' ears and minds just exploded. As we keep on rolling, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go around the block, see what people are keeping an eye on. Mr. Rock Lobster, what are you keeping an eye on until I see you in person tomorrow?
Well, we have once again another turnaround in the market. So from down on the open to vol down. So I'm only keeping an eye on as the Fed say anything stupid. Like, they change their mind so much. It is actually hard to believe that that's a functioning institution at this point. So mostly the Fed is really, if you're looking just for stocks, short-term swings and stuff, that's just anything the Fed's going to say now. So that's what I'm looking at as far as that goes. And VIX cannot hold 30. It could not hold a bid. So maybe that 240 straddle is starting to compress a little bit right now. But and just 4,000, I think we are kind of stuck here. And then maybe possibly, if we ping pong out of that 3,750, 4,000 level. And that's pretty much the only movie I'm looking at.
That's the only movie he's looking at. Mr. Uncle Mike, what movie are you watching, sir?
Oh, I'm watching all sorts of movies. I think I referenced Forrest Gump earlier today. No, I'm just kidding. So I think that what I'm watching right now, it's kind of like the lookout below to see if we make a run at the 3750 level. Watching the option block indicator, and that the S&P's rallied almost 20 points since we started talking today. So we just need to broadcast 24/7. That would solve all the problems of the bulls these days. So watching that, and then watching headline risk, and then I'm with Andrew. I'm watching the Fed as well.
All right, that music means we've come to the end of another epic sojourn through the world of the option block. But before we go, Mr. Rock Lobster was kind enough to join us from the Option Pit Summit. Mr. Rock Lobster, what's coming up at that summit? And if folks want to learn more about what you guys do, where should they go? What should they do?
Go to optionpit.com /mentoring. Remember, 888-TRADE-01, call TED. 10% off anything at Option Pit if you say I'm the most handsome man in options on the Options Insider Radio Network. Also, we have a live stream link. If you get any of our emails or stuff like that, that live stream link will be there, and it'll be somewhere on our website. So if you want to see Mark talk about volatility and get the room all excited, that will be the time to do that.
All right, and I will see said room for myself tomorrow. Should be interesting. Might be playing with the times a little bit for vol views tomorrow and help fit it in with the live event schedule for the Option Pit guys, the tomorrow listeners. So your live folks who may be doing vol views earlier at 11 a.m. Central, just letting you know out there. Maybe a little bit of a wrinkle out there. OptionPit.com, place to go to learn more about that event and everything else. Mr. Uncle Mike, any events to look forward to in the land of St. Charles?
No events to look forward to at this point, but still putting out videos on YouTube. Stay tuned for that. Check out my YouTube channel at St. Charles Wealth Management. Type it in. You should be able to find it. Feel free to follow me on Twitter. I try and tweet on YouTube as often as I can these days, at Mike TOSAW, TOSAW. And if you're looking for a financial advisor who lives in the option space, assuming it's appropriate for the client, feel free to check out my website and reach out to me, stcharleswealth.com.
St. Charles Wealth is the place to go. We got to get on out of here. If you're listening live, we'll be back in a little bit with TWIFO. Interesting new guest on TWIFO. It's always fun to expand the hot seat out there, bring on some new people talking about some interesting things, calendar flies and ags and other things. I haven't talked about that in probably forever on that show. So that'll be kind of interesting. If you're intrigued by that, stay tuned. You're listening live, you'll get it in your ear holes post haste. If you're listening after the fact, you'll have to wait until it hits the network. And again, tomorrow, live time for Vol View is going to be a little bit different. I think we're planning an hour earlier. Still up in the air with oddities, how we're going to do it tomorrow with everyone here in town. So we shall see what goes on with that in terms of timing. You'll definitely get it on demand on your Pro podcast feed at the very least. You always at these live events, the logistics of the connection and internet is always sometimes a little iffy for live streams. But we'll try to make it all work out. We'll let you know tomorrow once we know more. Back again for TWIFO in a little bit, and then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions@theoptionsinsider.com.